May ADP payrolls showed a gain of 37,000. That was the lowest increase since March of 2023 and far below the estimates of a gain of 110,000. You had total private payrolls that were up by 37,000, goods down by 2,000, services up by 36,000. Non-farm payrolls, the estimate was up 125,000. And joining us right now to talk more about all of this is Nela Richardson. She is the chief economist at ADP. Nela, this is a little bit of a surprise on the headline. You want to walk us through what's happening here?
Sure. So the lower number is really driven by shedding of jobs in the goods sector. We saw manufacturing, which actually had some surprise increases earlier this year, shed jobs in May. So that hiring momentum starts there, but it extends through several parts of the services sector, too. We saw losses in professional business services. We saw losses in healthcare jobs. So anyone who's looking at the Friday jobs print, remember that healthcare was a big, strong job creator last month. Trade, transportation, and warehousing also shedding jobs, also was up, trending up in the BLS report on Friday. But where I want to really clue in, Becky, is on small firms, because the smallest firms lost the most jobs in the May ADP report. I think that is something that we should all be paying particular attention to, because employment under 250, that's responsible for 70% of workers in the United States. So as goes small firms, as goes the labor market.
Well, I mean, that's been the big question. A lot of the policy changes that have come from the administration are things that large firms have a better shot at navigating. They can kind of lobby more effectively for it, and they have the ability to deal with some of these changes with a larger workforce. They can be more proactive on some of these issues. We've certainly seen that reflected in the stock market. The Russell 2000 has fallen well below what you would see with the other major averages. How does this compare, though? You're not talking about massive loss of jobs. It's down 13,000.
No, we're not. And that's an important point. This is not a labor market that's collapsing. This is a labor market where hiring is hesitant. It doesn't mean that these firms don't want to hire or aren't positioned to hire, but there is an uncertainty weighing on that hiring. And we've seen that for the second straight month. So the good news, I guess, is that it's a market that could turn around. And I'd also point to leisure and hospitality, which saw 38,000 gains.
Yeah, that's a surprise.
And it matches the JOLTS data from yesterday, which saw the job openings in that sector and entertainment go up. So in terms of consumer resiliency, we still want to see movies. We still want to go and get our entertainment. That sector is still strong. Consumers are still expected to spend on things that bring them entertainment.
The Fed's going to be watching this very closely. We spoke with Nick Timiraos earlier this morning, who just said that even if you get a good jobs report on Friday, it's not necessarily something that would clear the way for the Fed to cut rates yet. But if you do see a couple of weak job reports, or at least the unemployment number moving higher over a couple of reports over a couple of months, that would certainly push the Fed to be more likely to cut rates.
This is why I think the labor market is solid, because if you look at the 14.8 million workers that we can match uniquely in our data set, it's all about pay. And for the Fed, I think it will be about pay and wages. And we're seeing wages stabilize at a pretty robust number. So if you changed a job in the last 3 months, according to our report, you're going to see about a 7% increase from one salary to the next. That signals a strong labor market in terms of wage growth. And I think the Fed will be paying particular attention to how wages are evolving over this time.
Nela, is it too simplistic to think that smaller firms might be more, have more tariff angst, or more the effect of tariffs hit them earlier or harder than big firms?
Smaller firms have less options.
That's
They're
what I mean,
price takers. They have thinner margins, and they don't have access to the capital markets. They're dependent on largely bank loans or friends and family loans. So we're talking about the smallest firms. They don't have the same options. And so that uncertainty in hiring, and also every headcount matters for a small firm. They can't take it for granted. They can't overhire as easily. And so within this caution that we're seeing firms of all sizes hiring more former employees back. Again, trying to get the most efficiency from the worker, and that often means hiring someone you've worked with before.
But as a worker, it pays to leave. you're going to get more. You're much more likely to get a raise if you leave.
So if you can work the system, become a boomerang hire, leave, get a higher salary, come back to a higher salary, that's a good place to be in this labor market because it's still tight enough to support that kind of churn.
Let's take a look at yields. Rick Santelli points out that yields are down on this news. We've seen the equities futures give back a little bit, too. Okay, now across the board, the entire spectrum, you are looking at weaker yields. The 5-year is now at 3.99, the 2-year's at 3.92. And the 30-year still at 4.95, but it had been at 4.99 before.
Everybody's waiting for a Friday number, someday,
right.
A Friday number to show some tariff
weakness.
And
442 is the 10.
So 125, I saw that on the screen. Is that the estimate for non-farms on Friday?
That's about it. So what that number, if it's above 100, I would read that as a solid number for the BLS report. I think that's a number. If it's above 100, I think that we would take that number. I would just caution that there's no superheroes in this labor market. There's no sectors that are going to be dependable as job creators, and that's different than what we saw in 2023 and 2024 where healthcare and leisure and hospitality were almost always strong. I wouldn't depend on that for Friday.
Okay.
Nela, thank you. Anything really weird that you think is the strangest thing in this report, or?
I don't think it's a weird report. Okay. What I would point to is that the hiring momentum from the beginning of the year has slowed, right, but wages continue to be robust. That means that firms overall are getting the productivity they need for the workforce, and to me that signals that layoffs are not imminent. Okay. So that's the takeaway for the report.
I mean, there was a time when a little weakness in the labor market would help the stock market because of
the rate cuts would come.
It has to be a good rate cut, which is an inflation-based rate cut, not a weakness-based rate cut.
That's right.
Yes, but this is just very minor, and we don't even know if this is the start of anything. Really.
We have seen 2 straight months of weakness, so I do have. It's gone a little bit more from minor in my mind, but. You know, as wages are holding up, that means that they can support the consumer. So if you're looking at the big picture of the jobs market, I would say that wages are the place to look, and that means consumers can keep spending with historically low layouts.
Sorry to interrupt. I'm being told that the president just weighed in on something. I'll just paraphrase it. Too late, Powell should cut rates now before it's too late. Is that what he said, basically?
Those lines, yeah.
Right after the AD, might be.
I think he's watching.
More than a coincidence that he did. Thanks.
When things are uncertain, every data point is looked at.
ADP number out. Too late. Oh, my God. Yeah. So, Nela.
You know, I would take this number in the trend in which it is. We're seeing a little bit of softness in the labor market, and I think it's worth matching that with the Friday report to look at the big picture.
But you say it here and it comes out there. This was from you. Trump just did that because of the stuff you're saying, Nela. It's crazy.
You know, I'm an economist, and the economy matters a lot, right?
I hope he saw the ADP number on this show.